Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Yes, good morning and welcome to the U.S. Market Update. Now, the S&P 500 edged higher on Monday, even after President Donald Trump threatened high tariffs on more countries over the weekend. Losses were kept in check as investors bet those duties will eventually be negotiated down and looked ahead to a busy week for second quarter earnings season. The S&P 500 added 0.1% to close at 6,268. The Nasdaq Composite rose 0.3% to settle at 20,640, while the Dow Jones Industrial Average gained 0.2% to end at 44,459. Investors continue to monitor ongoing updates on the tariff front after Trump announced over the weekend that the U.S. will impose 30% tariffs on the EU and Mexico starting August the 1st. But leaders of the EU and Mexico indicated they intend to keep talking with the Trump administration this month in an attempt to agree on a lower rate. And we're going to start our conversation on U.S. markets today on the tariff front with Sevasti Balafas. She joins us now. She's the CEO of Goalvest. Sevasti, good evening in your neck of the woods.
Hello, good evening. Thank you for having me.
Yeah, thanks for coming on. Now, despite some surprise tariff headlines, the markets seem pretty unfazed. What's behind this resilience, you think?
I think it's a couple of things. Part of it is the market or investors have now gotten used to tough talk and then negotiations after that. So we saw the extension from July 9th to August 1st. We did have the commentary or the tough talk again over the weekend with some surprising tariffs. And you saw the market, the futures in the U.S. actually open negative this morning. But during the day, we actually got comments from President Trump showing that he's willing to talk again. It wasn't just about those letters that he sent out or the administration sent out, but he's willing to talk. So kind of backtracking a little bit or talking tough at the beginning, but then realizing that it's a negotiation and it's not done yet and the rates should be lower. I think the other part of it, though, is investors starting to look through beyond the tariffs and thinking about the fiscal stimulus that we will see in the near future, deregulation that we will see. So I think some positive things to come and tariffs not being as bad as it originally fared.
Yeah, fair enough. Trump talks tough, then cuts a deal. It seems like investors might be used to this playbook by now. But could there be a point where the market doesn't shrug off a tariff escalation?
Yeah, I do think that is possible. I mean, the longer that it lasts and the longer the negotiations take place, it gives companies the ability to adapt, to change their supply chains. We've already seen some of that, to go back and see where they can really change their processes, increase operating efficiencies, and see what else can be done. But I do agree. I mean, if it ends up that instead of the 10% baseline, it ends up being 20% or more, I think we will see those April 8th or beginning of April, that nervousness and that drop. It was about a 18% drop we saw from February to April as a result of the tariff talk. And so I think you could go back to that. But now it has given companies a bit more time to adapt supply chains and change things around where maybe it won't even be that bad.
Yeah, the president's announcement comes ahead of inflation readings this week, which will give investors a better sense of how the tariffs already in effect are being felt throughout the economy. So all eyes on the June CPI report. What are your expectations on that front?
So I'm in line with the market expectations where it's expected to be at about a 0.3% increase month over month, bringing the annual inflation 2.6% year over year. I think that's what it's going to be. I am expecting inflation to tick up down the line. I don't think we're going to see it yet because the tariff negotiations are still ongoing, because companies were able to use the inventory that they had on their balance sheet, or they were able to stockpile because they had some indications, so they were able to stockpile. So I don't think the full benefits of tariffs are going to be embedded in the inflation numbers just yet. So this particular reading, I'm in line with the overall market. Go out a few months, though, and I do expect inflation to tick up. I think it's inevitable because we do have a higher baseline of tariffs even at this point than we did last year before the Trump administration. But I just don't expect to see it hit for another few months. I think there's still that inventory left over and things are still being worked. We won't see the full effect yet.
Okay, so despite some concern about tariffs and inflation, investors seem pretty confident in the AI theme, which remains dominant. Meta building some massive new data centers. That's the latest developments there. What does this signal about long-term conviction in the AI space?
Well, yes, the announcement was on Mark Zuckerberg and Facebook spending this $70 billion on the data centers. They're expected to spend the $70 billion just this year. And, that comes in addition to other AI leaders or other tech companies spending, the number was $300 billion that was expected just this year. And they haven't backed off from that. Now, of course, we're getting into earnings season, so we'll hear more from management companies, see if anything has changed. But as of now, we still expect that number to be spent, those billions of dollars to be spent. And the thing is, we're finally seeing real benefits from the AI investments. And I hope to hear more of that as management is speaking during the earnings calls. But you're seeing real hours saved or real money saved on company balance sheets, which is helping earnings. So I think that commitment is there, the data centers, but the additional investment is going to continue as they had said it would, as those tech leaders said that it would.
Yeah, let's talk about those earnings then. You've said they are expected to come in lower than Q1. Why do you think that is?
Yeah. Well, there has been some pressure. So overall, last year, let me clarify. So the earnings expectation for Q2 is 5% expectation versus the actual earnings of Q1, which were 9% growth. So the expectation for Q2 earnings is about 5%. Frankly, I think there are some companies that can beat that. Overall, the bar is set lower, and there are some companies that are going to lead in this, and I think there are going to be some notable winners or losers as this earnings season develops, but the expectation is 5%. Companies had brought expectations down. I'm hoping that we see better than expected earnings, more in line with Q1. So the expectation is lower, but I hope that we see better than the expectation numbers.
Where do you see or expect to see upside surprises this earnings season? Any sectors or themes standing out for you?
So some of the financials, financials are going to start reporting this week. Trading, the volatility that we had back in April, of course, not great for the market, which was down significantly in beginning of April, but the trading volumes were higher. IPO or M&A activity, I should say, has increased versus last year. So an increase in M&A activity, that increase in trading around the volatility, I think we could see some surprises from the financials and some of the banks that are reporting this week, and especially those banks, like the banks that have revenue streams beyond just the lending, beyond just that reliance on the net income interest. So those with that trading activity and the capital markets exposure, I think we could see some surprises there.
All right, Sevasti, thank you so much for your time, and I hope you have a great evening.
Thank you. You too.
Thank you. That was Sevasti Balafas, the CEO at Goalvest. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.